Good morning, good morning, good morning. It's November the 7th. It's a Thursday. This is the Morning Blast with myself and Mr. Brown. There is Mr. Brown. Good morning, Dawn. Good morning, Paul. Good morning, Tom. Co-host invite sent. Hello.
Good morning, Ryan. Good morning, everyone.
Good morning. Let me just quickly do the legals. Nothing discussed on this Spaces session constitutes trade or investment advice or infers any kind of endorsement by PIQ Global Limited, trading as PIQ or PIQ Suite, or indeed its hosts, which is obviously as usual Mr. Michael Brown and myself, Mr. Ryan Paisley. Yes, another day. The sun still rose in the morning. No flying, no flying dragons or anything like that out my door. Same as always, right?
Well, indeed, and of course, you rose as well, which is surprising sometimes.
Well, yeah, quite. Right, thanks for that.
Sorry, mate.
That's all right.
It's said with love.
Are you in the office today, or are you having another work from home?
No. I'm back in the office today. I've been here since 6:30, so making
Question
up for
from the
lost time.
floor. Got a question from the floor for you, because obviously, you work from home over the election and stuff. Do you wear a suit and tie when you're sitting at home in your own home office?
Suit, no tie.
Of course he does. Of course he
Actually,
does.
no. If anyone who has met me recently will know that I haven't worn a suit for quite some time. I've become
Yeah, it's been
rather
flagged, mate.
scruffy, actually.
It's been flagged. It's been flagged.
I'm sure it has.
Anyway,
Shall we get on?
yeah, why not?
Yeah, right. Let's. Good morning, everybody. In terms of yesterday, then, of course, we did have the results, or effectively the results, the media calls at least, from the presidential election in the United States. Just to recap, of course, Donald Trump has been called as the winner of the presidential election. He will become the 47th president of the United States. Kamala Harris called him yesterday to concede the election and also made some public remarks yesterday evening, basically conceding and sort of apologising to her supporters for fucking it up, effectively. More importantly than that, though, in terms of the other levers of power in Washington, D.C., it looks increasingly likely that it is going to be a red wave. The Republicans have flipped control of the Senate, and they are on course to retain control of the House. Most probability and betting sites put that north of 90% now in terms of the likelihood that the Republicans
I would go as
claim the
far as
House.
saying more of a red tsunami.
Well, potentially, yeah. Especially if you look at the way that the vote has trended, even where states or counties have ended up voting for Harris, the trend has been an increase in the GOP vote share across pretty much all geographies, all demographics, all ages, etc., etc., etc. So yeah, I think that's
I tell
a
you
fair
one demographic.
characterization.
I bet I can guess one demographic that was still very much pro Harris.
Go on.
Single cat lady.
Oh Christ. Moving on before Ryan offends anyone else. So that the election is sort of pretty much done and dusted at this point. Obviously, we await confirmation that it is indeed this red wave coming to pass, but markets nonetheless have pretty much priced that in. Although I would say that actually trade yesterday was, dare I say it, a little boring. We effectively had one really big market move between the hours of about midnight and kind of 2 a.m. UK time. And besides a little bit of choppiness as the day wore on, we pretty much just held on to that move all the way through until the end of the US session. So all three major US equity indices closed at record highs, with the S&P up by 2.5%, the Nasdaq up by 2.75%, and the Dow gaining about 3.6%. Big move higher in small caps as well, though. Clearly, if Trump is going to deliver tax cuts, if he is going to adopt this sort of America First policy that we saw previously, that could be a boost to some of the smaller firms in the United States. Subsequently, the Russell trading about 6% higher yesterday. We did see some selling pressure across the Treasury curve. 2-year yields rising by 9 basis points, 10s up 15 basis points in the biggest one-day jump since April. And we saw 30-year yields move higher by 17 basis points, with the curve as a whole bear steepening. I think the move in treasuries was a combination of three things, really. One, higher growth expectations. Two, higher inflation expectations. And three, expectations for higher borrowing as well, given that Trump is not exactly running on an austerity platform. And if the Republicans control the House and the Senate, then there's not really going to be any kind of check or balance on what he is seeking to do. In the foreign exchange space, the dollar gained pretty broadly. It was just a day of effectively Trump trades going into effect. The dollar index having its best day in 4.5 years, up by about 1.5%, briefly trading north of 105 to the highest since mid-July. All other G10s losing ground. The yen, the worst performer, down about 2% as treasuries sold off. The euro down around 2% on itself, actually. Of course, tariff and growth concerns pressuring the common currency, and the market also repricing the ECB outlook in a more dovish direction, effectively saying that if Trump is going to go down this route, then the ECB are going to have to cut more significantly and perhaps even quicker in order to cushion the economy against these downside growth risks. And we also know that Christine Lagarde and Donald Trump are not exactly best friends, even if they do use the same tanning salon. We also
Wow.
saw. Well, come on. We
Well,
also
to be
saw.
honest, I think it's more both spray tans, but that's we're getting in the weeds here.
We really are. We also saw cable softer yesterday by around about 1%, giving up the 129 figure, and gold trading a fair chunk lower as well. Of course, if the dollar is having its best day since March 2020, it's not exactly surprising that gold is going to struggle. The yellow metal down 3% yesterday to its lowest since mid-October, below $2,700 an ounce. In terms of other bits and bobs, then, if you thought that was enough for elections, then I'm very sorry, because there's more on the way. We had news yesterday out of Ireland. They're going to be holding an election on the 29th of November. That's worth watching because in the most recent election, which was held 4 or 5 years ago, there was a big rise in support for Sinn Féin. And effectively, the other two main parties in Ireland, who I can't pronounce because I don't speak Gaelic, they had to sort of club together to keep Sinn Féin out of government, which is why we saw this weird kind of power sharing thing where Micheál Martin did 2.5 years and now Leo Varadkar's doing 2.5 years at the helm of government. So it could be interesting to see how that one pans out, particularly through the lens of UK-Ireland relations, but we will leave that one for another time. Meanwhile, in Europe, Germany are also looking like they're going to be holding elections. Things are going from bad to worse in Germany, to be completely honest with you. Yesterday, we saw Olaf Scholz sack his finance minister. Now, that would be bad enough under normal circumstances. When you recall that the finance minister is one of the most senior members of his coalition partners party, it kind of spells trouble. Scholz has also said that he's going to call a no confidence vote in his government, which will be held in January. So someone's going to have confidence in them for 2 months at least. If he loses that confidence vote, which, let's be honest, the governing coalition has collapsed, it's almost certain he's going to, then they are going to hold what's being termed a snap election at the end of March, which is not particularly
It's
snappy,
not
but
that snapping,
nonetheless,
yeah, exactly.
the next German election was not due until October. So it is nonetheless, although it's not overly quick, it is nonetheless about 6 months earlier than we had been
Just on
expecting.
this, if I may, so
Go on.
Schultz actually said yesterday that he actually like made it very clear why he'd sacked Lindner, and it was, quote, for his obstructive behaviour on budget disputes, accusing the minister of putting party before country and blocking legislation on spurious grounds. Now, this has been a story that's been building for a long time. This having trouble passing the budget. We were expecting all this to fall apart on the 14th of November, so we're basically just a week early.
Yes.
But I have seen some people that all of a sudden experts in German politics claiming that this firing of Linda is related to Trump.
No,
It's
it's
not.
not at all.
It's not. It's like, just it's not. just
No.
just trust me on this one, or trust us on this one. It's nothing to do with Trump. This has been brewing for a long, long time, and it was probably going to happen on the 15th of November, but they've just front ran it, basically.
Yeah, indeed, and actually, it's not particularly surprising anyway. But as you say, it was very relatively well telegraphed. But also,
Yeah.
we are a year away from when the German election was scheduled to take place. So if you're Lindner, if you're the Greens, or anyone in that governing coalition, you're kind of going to be sat there going, we have to face the public in a year's time and campaign on something. We need to mark out some degree of difference
Yeah.
because obviously there is huge dissatisfaction with the government in Germany, which Olaf
Well,
Scholz is obviously the chancellor. So if you're
this is it,
the
right?
junior partners in the coalition and don't have any, you can't say, oh well, we stood up to them. Then you're going to take a drubbing at the ballot box as well.
Well, this is it, and this is why there's a solid case. We're starting to play 4D chess here. There's a solid case that Linda engineered his sacking because it gives
I think
him
he probably
now.
did.
It now gives him, very much a clear path to set himself aside from the traffic light coalition, and really put himself in prime position to take over. Because the Germans are very, very unhappy with how the economy is being run. We're
Yes.
seeing in the auto sectors especially. Just side note on that, I'd be really interested to see the next week or so if the automaking unions kind of try and take some liberties over the fact that the government is collapsing, and we might see some, an uptick in industrial action and them getting unhappy. Obviously, we've got the potential wage cuts from Volkswagen on the cards. So I think, there is a chance we might even see a much more snappy election coming in the because I genuinely fear for what's going to go on in German politics, because it's going to be carnage if we have to wait until March before a proper election.
Yeah, there's certainly a lot of moving parts there. Just three other things I wanted to mention before handing over back to you. You mentioned autos. We had data out again. This was kind of all overshadowed by the election yesterday, but we did have data out of China showing that car sales rose by 16% year on year in October. Probably mostly domestic purchases, I would argue, but nonetheless one to bear in mind. A special headline for Tom Talks Cars if he's on the call. The
He is.
Saudis, they want to throw $100 billion into AI. Apparently, the UAE have built some sort of tech hub. The Saudis want to basically build their own version of that. As
I love
the
it when you talk
UAE,
tech.
well, exactly. I was going to say all the nations in the Middle East have basically realised that oil is going to run out at some point, and it's a continued part of these diversification efforts. And last but by no means least, fallout from the UK budget continues. We saw gilts continuing to sell off yesterday, although of course there are global factors behind that as well. But we've started to hear increased chatter from businesses around the impact of the government's national insurance hike. Now, of course, recall that it's not just an increase in contributions from 13.8 to 15%, it's also a big cut in the threshold. So you now start paying national insurance contributions as an employer on anything above £5,000 in terms of salary, whereas that was just above £9,000. We heard from Marks and Spencers yesterday. They are saying that this is going to cost them an extra £120 million per year. We've just heard, as we've been speaking, from the CEO of Sainsbury's, who said that the tax hikes are going to cost them £140 million per year. So the Labour government going about creating a pro-business and pro-growth
Yeah,
environment in the only way that
bollocks.
they can.
Exactly that. Exactly that. Just a couple from me then. Well, assuming you are finished.
I am, yes, yeah, yeah.
Perfect, perfect. Actually, so a couple from me from our dear friend Zach, who's listening, and a couple at the end from Andrew Hart, also a dear friend. Um, Firstly, just quickly, obviously some German negative economic news, so you better believe I'm reading
Oh, of
that out.
course.
Of course, that I've already posted, Ian. Don't worry. Germany's trade surplus narrowed as exports dropped, adding to signs of weakness in the country's trade. I think the signs are already pretty clear. Meanwhile, industrial production fell in September amid leading companies pledging factory closures and cost cuts, while the country's politics lurches into crisis. That's from the Wall Street Journal. As Michael mentioned at the start of the show, the Republicans look positioned to narrowly keep power in the House, setting President-elect Trump up to more easily confirm nominees, muscle through key priorities on taxes and other issues. Again, it just gives him the green light to get most things done. He's got a lot of promises that he needs to keep up with, so we'll see how that goes.
Yes.
The number of US borrowers in danger of defaulting a second time on commercial property is at the highest level in a decade, raising concerns that the bank practice known as extend and pretend is hiding growing systematic risk in the commercial real estate sector. I believe this is just like, just keep delaying your default until you don't have to default anymore, unless you really do have to default. I believe that's the layman's word, like term for all of that. Just in China, China's stocks rallied ahead of the NPC announcement on Friday, with expectations growing of a larger stimulus measure to counter Trump's presidency. I'm still in the boat that I reckon they might wait a little bit before doing anything, or they might announce but just not implement, because I do think they'll want to see exactly what Trump has in mind with China.
Yeah. So
You know,
can I just add to that? I
you
mean,
can, mate. Of course, you can.
I
Come
completely
aboard.
understand that. So the Chinese equity market is up what 3-ish% today? I think something like that. The CSI closed about 3%.
Hmm.
It's at a 1 month high anyway.
Yeah.
And I understand the argument people are making, which is Trump's come in. There's going to be a shed load of tariffs, which means they're going to deliver more stimulus. But the argument you're effectively making there is that the economy is going to get worse. They're going to deliver stimulus that doesn't help the economy. Eh? I still would not be touching that with a 10-foot barge pole,
Well,
personally.
it's China stocks, right? So they could say anything. I still wouldn't want to touch it.
Well, yeah,
Um,
that's very true.
yeah. There's. I'm not going to get crude. I'm not going
They're
to get crude.
they're
Right, moving on.
they're only yours until the government decide that they're not anymore.
Exactly, exactly. Bit like what the Labour government's going to be doing over here.
Oh god! Oh no! Oh no!
Sticking with China, sticking with China. China's outbound shipments grew at the fastest pace in over 2 years in October, set to 12.7%. However, this was purely in anticipation of further tariffs from the US and the EU, as the threat of a two-front trade war looms. And to give you a guide of how realistically China is performing, the imports undershot negative 2.3% underlying weak domestic demand. Oil imports into China sank again last month, highlighting soft consumption in the largest buyer of the black stuff, while broader raw material imports mostly rose year on year. Just some equity news. Albemarle, the world's largest lithium producer, lost more than $1 billion in Q3 and said it would slash its capital budget amid a 71% drop in the price for EV battery metal, lithium. And they also announced that they're going to cut the workforce by 6 to 7%. A couple from Andrew. He notes that Tesla. Sorry, he doesn't say that. Wedbush analyst Dan Ives suggested that Tesla could soar to a market cap of 1 to 1.5 trillion during Donald Trump's presidency. I think this is, oh, just for you guys, the market cap for that now is about 925 billion. I think this is a lot of people kind of suggesting that, yeah, Musk couldn't have been more vocally pro-Trump, as in like he was helping Trump win the presidency. Therefore, he's positioned himself spectacularly to make the most out of having your best mate in the White Office. And if anyone can, get some extra regulatory hurdles dropped or whatever, it's probably Elon Musk. So we'll see what happens there. And finally, just because it's a bit of smut,
Oh
the
no!
headline: Trannies love Trump. And of course, I mean the Dow transport sector. And they finally break out of the buying boying Dow theorists. Sorry, there you go. It's trannies for Trump.
Good. I would put Dow theory in the same camp as something like Elliott wave or astrology,
Oh,
but
massively. But as I said,
no,
it's you
it's a
had
good
me at
headline.
trannies for. You had me at the headline. This I'm not going to. I could have just said trannies for Trump and just left it there. But there we go.
Yeah, for any new listeners, Ryan is very immature, but I'm sure you've worked that out by now. Moving on to today, we can hopefully move past politics, although not until, of course,
Oh,
we've listened to your call in 12 minutes' time with Helen Thomas,
exactly.
which will be very well worth listening to, I imagine. Also, at 9 o'clock this morning, we have a policy decision due from the Norges Bank in Norway, although they are highly likely to keep rates unchanged to their current level of 4.5%. And we have actually already this morning had a policy decision out of Scandinavia, with the Riksbank having delivered a 50 basis point cut to
Jeez.
2.75%, bang in line with expectations. And that was just as we started this call about 20 minutes ago. Looking ahead to the rest of the day, it is a very intense focus on monetary policy, actually. We hear from the Bank of England at midday. The BOE set to deliver a 25 basis point cut, taking bank rates to 4.75%. And that would, of course, be the second cut of the cycle after the first back in August. That August cut was a very narrow, or the narrowest possible vote on the MPC, with it having been a 5-4 vote in favour of a rate cut. This time around, it is likely to be much more straightforward. Consensus favours an 8-1 vote in favour of a 25 basis point cut, with just external NPC member Catherine Mann dissenting in favour of keeping rates unchanged. There are some risks around that, though. There is the possibility that Megan Green also dissents in favour of keeping rates steady, while uber dovish external member Dingra might vote for a 50 basis point move. But the important thing is that the core of the committee are, one, in favour of cuts now, even the chief economist Hugh Pill, and two, that they will all mainly be voting for the same policy action. In terms of guidance, that is likely to be unchanged from what we saw in both August and September, whereby policy is decided meeting by meeting, and that the policy stance will need to remain restrictive for sufficiently long in order to remove persistent price pressures from within the economy. There have been some chatter that the BOE would make a little bit more of a dovish pivot this time around, but given the inflationary implications of last week's budget, that is seemingly unlikely at this stage. Speaking of which, the bank's new economic forecasts, that is likely to see the CPI forecast revised higher over the next couple of years, but the MPC will probably still point to headline CPI being below 2% in 2 years' time. Otherwise, they're effectively admitting that they're not doing their job. Governor Bailey at the press conference, very likely to stick to the script. Of course, Bailey will not make any explicit comments on fiscal policy, nor will he make any comments on President Trump's election yesterday, no matter how many times journalists ask him about that. What is unlikely, though, as well, is that we see Bailey repeats the lines that he used back in October when he was speaking at the IMF, saying that the bank could be a little bit more activist or a little bit more aggressive in delivering interest rate cuts. It seems unlikely that Bailey would go as far as repeating that this time around, given the uncertainties surrounding the budget, which we just mentioned. Of course, we also hear from the Fed today, the FOMC at 7 o'clock this evening, expected to deliver a 25 basis point cuts, taking the target range for the Fed funds rate to 4.5% to 4.75%. Of course, this comes after a 50 basis point cut at the September meeting. Although we are likely to see God knows how many morons on the internet say that this is politically motivated, they're cutting rates because Trump's in office, that is complete and utter nonsense. The Fed have telegraphed this 25 basis point cut for some considerable time. And in fact, money markets have been pricing it in pretty much since the last FOMC meeting. It is not a surprise. It is not politically influenced.
This links to kind of this whole thing with the Germans, right? It's like, yeah, everyone all of a sudden is an expert in Trump and what the
Yeah.
international reactions are, and it's now basically anything that's going to happen for the next week is going to be blamed on Trump,
Oh, yeah,
even
100%.
if it's stuff that has been, like we said, with the German government falling apart. We knew that we've been talking about that for fucking 4 weeks on here. Well, more than that,
Yes.
probably more like 4 months. But yeah, it's
Feels
like,
like 4 months.
yeah, tell me about it. Fucking this today's show feels like 4 months. Yeah, it's like, yeah. So basically, just be mindful that a lot of people all of a sudden are experts in these things, and they're really not.
Yes, no, very much agree on that one. So yeah, the Fed 25 basis point cut. The vote will. The vote doesn't matter too much with the FOMC, to be completely honest with
No
you.
one cares.
But it is likely to be unanimous. It's only of interest because Governor Bowman dissented in favour of keeping rates steady. Sorry, in favour of delivering a 25 basis point cut at the September meeting instead of 50. But she will probably fall in line this time around. In terms of the statement, probably a bit of a non-event, to be honest. I can't really see the Fed changing their statement too significantly. They will just reiterate that they are following a data-dependent approach and that they will continue to remove restriction depending on how that data evolves. And that's very much what Chair Powell is likely to say at the post-meeting press conference, taking rates back to neutral over time, and that the speed of that journey will depend on how the incoming data evolves. Of course, again, all the journos at that press conference are going to ask plenty of questions about Trump, about the election result, about the political makeup of Congress, about any potential stimulus that might be on the horizon. Powell is not and cannot answer any of those questions.
No,
What he will do is stress that the Fed are independent of politics, and that they will continue to follow the data when determining policy, and that if there are any changes to the fiscal stance, then the Fed will take account of those changes when they are made and not in advance. And that is really all Powell can do. So I think the presser could actually be a little bit of a tough watch this evening, or tougher than normal, I should say, because we're probably not going to get any explicit guidance on the policy outlook, and we're going to get 20 odd journalists sort of baying for blood and trying to get a headline. Fed chair says he doesn't like Donald Trump,
Oh yeah, it's
which
gonna
is
be loads
never
of
going to
that.
happen.
There's gonna be a
So
hell
that's
of a
going
lot
to
of bait.
Yes, so that is going to be a pretty grim one, I would imagine. And just lastly, in terms of economic data today, there are a couple of things out at 1:30. We get the unit labour cost data out of the United States for the third quarter. We also get the weekly jobless claims figures as well, although neither the initial nor the continuing claims prints pertain to the November non-farm payroll survey week. And of course, market participants also just keeping sort of half an eye on US election results just to see whether the GOP do indeed retain the House of Representatives, although that does seem pretty much guaranteed at this point.
Perfect. Well, great timing. So now I have a couple of minutes to go make a coffee before my political blast with Helen Thomas, the awesome Helen Thomas, who I met at the Stafford on election night, which is very fun.
Did they
Um,
ask for you to bring a sort of chaperone or something? Is that what that was all about?
as always, mate, but I just normally turn up with you or Richard.
Oh,
So yeah,
yeah,
good luck to him.
sadly.
But yeah, so Michael, as always, thank you very much. Listeners, thank you very
Oh
much for
dear,
listening in. What?
I've just seen your flaky pastry
Oh,
pun.
I thought that was a good pun, actually. I thought that was good. Anyway,
Well,
we digress. Listeners, thank you as always. Tune in tomorrow for more. As always, if you are trading, keep it tight and always remember to factor in the fuckery. And we will check you out tomorrow. See you later.
thanks, guys.
Du- 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 du.